Welcome to the Deep Dive. We focus on insights that matter, cutting through the noise. Today, we're really getting into AAX. It's a project causing quite a stir, maybe even offering one of those aha moments in crypto. Our goal here, simple. We want to pull out the absolute key knowledge points, give you a clear strategic view of its vision, its potential, and skip the heavy jargon.
Yeah, what's really interesting, I think, is how AIFEX is positioning itself. It's more than just tech. It feels like a very carefully built financial strategy, Designed for the long haul in DeFi. We're going to look at it today, maybe through the eyes of a capital market strategist, see what's really under the hood.
Exactly. Clarity is the aim. We want you to leave understanding AIFEX's unique points, how it stands apart strategically, and, well, the big picture vision. It's about giving you the tools for smart decisions in this, let's face it, pretty complex space.
The foundational pillars of trust and transparency.
Okay, let's start with credibility. First impressions count, right? Especially in crypto. AIFEX is listed on CoinMarketCap. That's a big step. And not just listed. We're talking a market cap around, what, $1.6 billion. CMC isn't listing just any tiny coin, so that feels like a global nod, a sign of some reliability. What does that initial recognition tell us, especially with that kind of valuation?
Oh, absolutely. That CoinMarketCap listing, and yeah, hitting $1.6 billion market cap right out of the gate, that's a powerful trust signal, a really powerful one. It's not just about being seen. It implies a certain level of due diligence has likely happened, auditing, reporting standards, things that are crucial for broader investor confidence.
Right. Including maybe bigger players down the line.
Potentially, yes. Institutional interest often looks for these markers. It says, okay, this isn't just some flash-in-the-pan project. It's established a real presence. It definitely sets it apart.
Now, here's something interesting. Maybe a bit confusing for users. You might see a price difference. In the AIFEX app itself, maybe the price is shown around $19.07. But then you look on PancakeSwap, a DX, and it's maybe $7 or $8. It's quite a gap. Strategically speaking, what's going on there? Why the difference?
Yeah, that disparity is actually a really critical piece of the current strategy. It's deliberate.
Deliberate, okay.
Yes, it's not a flaw, it's a temporary phase. It mostly stems from a recent smart contract migration they undertook.
Ah, okay. Like a system upgrade.
Exactly. Think of it like upgrading your computer's operating system. You have to move things over, reestablish connections. So liquidity tied to the old contract needs shifting that can, fragment the market temporarily, cause different prices while things rebalance.
Right.
They're currently in that process, specifically balancing liquidity between their USDAI and USDT pools.
Okay, USDI and USDT, different types of stable coins.
Right. USDAI often leans more decentralized, while USDT is, well, the big centrally backed one. Balancing them builds robustness, makes the system more resilient. It's a careful balancing act.
Okay, so a temporary situation from the migration. But AIFEX isn't just waiting, are they? You mentioned strategy. They seem to have a plan to manage this gap, involving something called coin burning. What's the strategic thinking behind burning coins, especially right now? How does that help close the price gap or stabilize things?
Coin burning is a classic deflationary tool, but yeah, how AIFEX is applying it seems quite strategic. The core idea is simple. Reduce the total supply of AFX tokens over time, fewer tokens available. They plan to use a portion of their profits generated from their strategy.
I get to those strategies.
I will.
Yeah.
They use those profits to buy back AFX from the open market, like PancakeSwap, and then basically destroy them, remove them from circulation forever.
Okay.
So supply goes down. If demand stays the same or grows, which the staking rewards encourage, basic economics says the price should feel upward pressure.
Pushing it towards that internal value. The $19.07.
Exactly. It's designed to shrink the external supply, guiding the market price upwards to align with their internal valuation over time. It's an active stabilization and appreciation mechanism. 2. The deep dive into AIFEX's decentralized strategy.
All right, let's pivot a bit. Let's talk about the core tech advantage here, the decentralized application, the DApp. This feels like where things are headed, doesn't it? Decentralization. What's the big deal about AIFEX's DApp from your view?
Oh, the DApp is absolutely central. It's both their tech foundation and, frankly, their philosophy. It really embodies that shift towards a new kind of finance. The most significant thing, user control, 100%.
Meaning your keys, your crypto.
Precisely. You control your wallet, your assets. No middlemen holding your funds. No central point deciding if you can access them. Plus, transparency. Every transaction is on the blockchain. Immutable, verifiable. Trust comes from the tech itself, not some third party promising to be good.
And security.
Enhanced security, definitely. The smart contracts, the code running the system, can be audited. Anyone can check the logic. That makes the whole ecosystem inherently safer, more robust than, say, a traditional closed system. It really flips the model, puts power back with the user, trust through transparency. That's the core of DeFi, and they seem to be embracing it fully.
Okay, within that dApp, inside their system, there's this concept, the anchor price, set at $19.07. It's intriguing, but strategically, what's backing that? What gives them the confidence or the ability to say, inside here, your AFX is worth $19.07, when the outside market says $8? What's the commitment there?
That is the question, isn't it? And it highlights the strategic thinking and maybe the calculated risk they're taking. They're not just inventing $19 some cents. It likely reflects their own internal valuation, their projection of long-term worth. Perhaps it's partly backed by treasury assets, or maybe their forecast earnings from those trading strategies we mentioned.
Okay, so it's tied to their performance expectations.
Plausibly, yes. This higher internal price acts like a powerful magnet. It's essentially a subsidized entry point for early stakers.
An incentive?
A very strong incentive. It's designed to pull liquidity into their ecosystem quickly. They're making a bet, really, a bet that the long-term benefits more users, bigger asset pool to manage. The compounding returns will massively outweigh the short-term cost of maintaining that internal price difference.
So the anchor price is both a promise and a strategic tool to attract capital.
You got it. A promise and a very powerful incentive.
Which leads us to, well, you called it an incentive. If you can buy AFX outside for $7 or $8, then immediately stake it inside, where it's treated as $19.07 for reward calculations. It definitely sounds like a golden opportunity. But what are the hurdles? What concerns might investors have about bridging that gap, and how does their game plan tackle those?
Absolutely. It's designed to look very attractive. And you nailed the core advantage. Common concerns. Well, obviously the risk of the external price dropping further during this transition, volatility, and maybe some skepticism. Like, how can they really close such a big gap? Fair questions. Their game plan seems designed to address exactly these points. It's multi-layered.
Okay, lay it out for us.
Right. First step, balancing liquidity. They're actively, gradually filling those USDT and USDA pools. It's not just dumping money in, it's strategically managed to align the external DX price with the internal $19.07 anchor. It's about managing supply and demand on the open market.
Step 1. Fix the external price mechanism.
Step 2, generating returns. The USDT people stake. It doesn't just sit there. It gets put to work. They're using advanced strategies. AI quant trading, think high-frequency algorithmic trading. Arbitrage, exploiting tiny price differences across exchanges. And liquidity provision earning fees by facilitating trades. These aren't basic strategies. They're designed for serious capital growth.
Okay, so the staked money earns its keep.
Step 3, the deflationary mechanism. We touched on this. A slice of those profits goes to buy back AFX tokens from the market. Then, poof, burned, gone forever, reducing supply.
Thriving scarcity.
Exactly. Which leads to step 4, price appreciation. Supply shrinks. Demand hopefully grows because of these staking rewards and more people joining. Basic economics, again, the external market price should naturally climb towards that anchor price over time.
That's a pretty detailed plan. It really makes you think. Who is best positioned to benefit from this kind of orchestrated multi-step strategy? 3, a strategist's global market view. The underpriced opportunity.
Excellent question. And that takes us right to how AIFEX looks from a strategic market perspective right now, what they're doing. You could frame it as a sophisticated liquidity migration strategy.
Liquidity migration, meaning moving money around.
Essentially, yeah. Orchestrating a flow of capital. Moving liquidity from their current, more controlled internal system towards the open market DXs first, maybe CEXs, centralized exchanges later. And that anchor strategy, the $19.77 internal value, that's the engine driving the migration. It offers much better rewards inside than the current outside price justifies. It pulls you, the investor, and your capital into their ecosystem.
Okay. Actively pulling capital in. You know, it reminds me of talk around some IPOs, the underpriced IPO stock idea, where the big institutions maybe see the real value long before the public market fully catches on. Is there a parallel here?
That's a very sharp analogy. Yes, I think there is. I've seen it in traditional markets. A strong tech company might IPO and for a little while trade below what seasoned analysts think it's truly worth, maybe before the big research reports hit. or before wider awareness builds.
An information gap almost.
Or perception gap. And for those who see the underlying value early, it's a classic opportunity. So if you're buying AIFEEX now at these lower external prices, you're effectively positioning yourself like an early stage investor, almost like a VC.
Getting in cheap.
Getting in cheap, but potentially getting the earning power associated with that higher internal anchor price once you stake. It's a privileged position if the strategy plays out.
Right. Which brings us to risk versus reward, always the key consideration. What does that profile look like here for someone thinking strategically?
Well, the risk is clear, short-term volatility. The external price could dip further, maybe $4, maybe $5 in a shaky market moment. That's always possible with newer assets.
We need to be prepared for that.
Absolutely. But the reward side, that's the potential alignment with the $19.77 anchor. If, or perhaps when, the external price catches up and the whole game plan is geared towards making that happen, you're potentially looking at, well, 100%, 200% upside, maybe more, from current external levels.
Significant potential.
Significant potential. But it requires patience, it requires understanding the strategy, which, leads to the next question. How do you actually play this? How do you navigate it smartly?
Exactly. It feels like they're asking early participants to sort of trust the plan during this phase, right?
Yeah.
Rely on the mechanics they've set up. Are there examples, maybe economic ideas that support this kind of phased approach working out long term?
Yeah.
And then, how does that translate into a personal strategy? We often hear about dollar cost averaging, staking, reinvesting.
Right.
Why is that combo recommended here?
Yeah, there's definitely precedent. Many successful projects, crypto and traditional, have used phased rollouts, using incentives to attract initial capital while building towards a broader market value. The key is always the clarity and execution of the plan, which AIFEX seems to be laying out. As for the personal strategy, DCA, stake, reinvest, it's almost perfectly designed for this exact situation. Let's break it down. 1, dollar cost averaging, DCA. Simple but effective. Buy smaller amounts regularly over time.
Instead of trying to time the bottom.
Exactly. Smooths out the bumps, reduces the risk of buying everything at a temporary peak. You get a more stable average price. 2, staking. This is critical here. As soon as you buy AFX, staking it in their FES, DEP essentially locks in that $19.77 value for your rewards calculation. The external price could wobble, but your earning potential inside is based on that higher anchor. You're securing the premium.
Got it. Leverage the internal system.
3, reinvesting dividends. Those daily AFX rewards you get from staking, don't just cash them out immediately necessarily. Reinvest them, stake them again.
Right.
This is a compound interest in action.
Let your earnings generate more earnings.
Precisely. Over time, this can dramatically lower your effective cost basis. You might reach a point where your initial investment is covered, and everything coming in is essentially free cost ownership. Your daily income stream just keeps growing. It's about discipline and letting the system's mechanics work for you. 4, the Golden Goose, an everyday analogy for strategic investing.
Okay, let's try and make this crystal clear. Analogies often help. Imagine you're not just buying a token. You're buying a golden goose, an asset that keeps producing value.
That's a great way to picture it. It really captures the essence of the opportunity here, beyond just the token price. So let's walk through it. You buy AFX on PancakeSwap, say, for $8. That's you buying the goose. But the moment you bring that goose into the AFEX farm, their DApp, and stake it, the farm owner, AAFEX, says, okay, for feeding purposes, for egg production calculations, this goose is valued at $19.07.
So you bought an $8 goose that the system treats as a $19.07 goose for its earning potential.
Exactly. You've instantly captured that internal value premium for its productive capacity. Now, this goose, it lays eggs daily. These eggs are your AFX rewards, a consistent daily income stream.
Okay, goose laying eggs daily. Simple enough.
Now comes your choice. Your discipline. What do you do with the eggs? Option 1, sell the eggs immediately at the current market price, say $8 per egg per AFX. Quick profit, immediate cash, fine. Option 2, take those eggs and instead of selling, you restake them. You use them to hatch more geese, essentially.
Compounding, raising more geese to lay more eggs.
Precisely. This is where the long-term strategy kicks in. Selling daily gives you cash now. Restaking builds your flock, grows your daily egg production exponentially over time. It could lead to that cost-free goose ownership we talked about.
Where the eggs cover the initial cost of the goose.
Right. And the real strategic payoff, imagine if, down the line, the market price for those eggs, the AFX tokens, climbs from $8 up towards that $15, $20 mark, aligning with the anchor price. If suddenly the eggs you're collecting each day can be sold for $15 or $20 instead of $8, your profits explode. That's the long-term potential tied to the success of their overall plan.
So boiling it down, buy the goose for $8. It is valued internally at $19.07 for laying eggs, and it lays eggs daily. What you do with those eggs, sell now or reinvest to grow your flock, depends on your strategy and discipline. It's positioning, not just buying. Outro. Wow. Okay, that's been a really insightful deep dive into AIFEEX. It peels back the layers, reveals a pretty sophisticated strategy behind what might just look like another crypto project on the surface. We've seen how they're using strategic design, transparency, this clear game plan, all converging to potentially create a compelling opportunity, especially for those looking long-term.
Yeah, if you connect it to the bigger picture, AIFEEX isn't just launching a coin. It feels like they're engineering an entire ecosystem, one built for, hopefully, sustainability and growth. The design seems rooted in understanding capital market dynamics. The vision seems to be about a robust, deflationary system that rewards commitment, rewards understanding the mechanics. It's asking you to look past today's price ticker and see the underlying engine designed to build value over time.
Which leaves us, and you, with a final thought to consider. In this fast-moving market, are you just looking to buy a token? Or are you looking to strategically acquire an asset like that Golden Goose that, with patience, with discipline, could potentially become a source of real lasting value? Something to think about. Thanks for joining us on this deep dive.